So hello, hi, and welcome. So you have completed your exams, and I know that few of them will be very happy, few of them will be sad. So we have mixed emotions here and there after the examinations. So those who have completed the examination, okay, first thing is congratulations, because completing the examination, the most pressure period, is one of the most crucial time you have spent, and you have spent a lot of pressure. So after completing the examination, you deserve a break. Okay, see, however your exam went, good, bad, medium, the result is not in your control. So because the result is not in your control, you should not think more about it. In fact, you should see what you can do ahead. So why are we here? Okay, why are we here? So today I am here to analyze the financial management paper of May 2024, and I am going to solve this paper for you. Now sir, why sir? Exam is over. Why you want to solve the paper now? See, I am not solving for May 24 guys. Okay, I am not solving for May 24 guys. People who will be writing afterwards, right, November 24, if at all they want to see the May 24 question paper, how it was, okay, and it will be helpful for their preparation. And May 24 students can also see, okay, can also see that how it went. But you should never be worried about, sir, this is not the answer that I wrote, that is not the answer that I wrote. Okay, we are just solving the paper, we are just analyzing the paper, and lot of assumptions will be taken here and there, lot of things will be happening. Okay, so that is the reason I am here to solve this question, and I will be solving step by step. I will not be writing the answer in the question paper and I will be telling do this plus, do this minus. I will not be doing that. I will be solving the paper properly, so that afterwards, if you were to see this video, you will be getting all the answers, and I'll be telling step by step also. Because why na? This is just like your workout, this is just like your practice. So people who are writing after me, these question papers are your practice papers. These question papers, revision test papers, mock test papers are your practice. So if you're going to fight now, before fighting, we should have some net practice, right? So this is what is your net practice, solving questions. Because understanding concepts is one different thing, and solving questions using those concepts is a different ball game altogether. Correct? So understanding the regular face-to-face classes la vaangittu, you will understand all the concepts. But when it comes to practice, that also requires a hell lot of efforts that you want to put in practice. You have to solve a lot of questions, you have to have an approach how to solve a problem, you have to see what are all the intricate points or issues that usually people come up. A lot of things we have to see. So that is what we are going to discuss in today's video. Okay, so now let's start with our paper. Okay, let's start with our paper. So I am your FM faculty, CA Taufik Tufail. I hope you know me. If you don't know me, you know me now. Okay, so my name is CA Taufik Tufail and I am your FM faculty, and I will be solving this question May 2024. Now let's see. Okay, let's see and let's start. See, this is the question paper that I got. Okay, you guys only shared me in the Telegram group. This is the question paper that I got. Okay, now 50 marks is the FM. Okay, in the 50 marks FM, if you see, the last question usually will be theory. Okay, so last question of 4 marks, 8 marks and 10 marks. So last 10 marks question is theory marks. So last 10 marks are theory. So 40 marks is the practical problem that we have to solve. Okay, 40 marks is the problem that we have to solve. 10 marks is the theory. So see, 20% weightage is given for theory. I always say in the class 20 to 25% weightage is given for theory. All others are from practical. And theory doesn't mean that theory will come only from the first and second chapter. Theory can come from any chapter. Now see this question. Discuss the relevance of payback reciprocal. This is from the investment decision chapter. People think investment decision chapter la theory varthukku chance illa, but theory will come. This is crowdfunding chapter number 2. Okay, this is bank credit chapter number 2. So chapter 1 and 2 is given more importance for theory, but theory can come from other chapters as well. So you have to prepare, okay, some points here and there for theory. So I'm not discussing theory because I always feel that theory la a faculty cannot make a lot of value addition, but in solving practical questions, in giving you that knowledge, okay, of all the concepts, that is where I am here. Okay, so I'll be there and we will be launching a batch. Okay, that would be like a workout batch for the next September. We will be launching a batch that will be like a workout batch where we will be teaching concepts and we will be solving a lot of problems, and we will make you exam ready. So that is like a fast track, okay, where I will not be, teaching a lot of concepts. I will be teaching concepts relevant for the examination, only for the perspective to solve the problem. So once you're solving all the problems, we will be solving a lot of problems. That will be like a workout session, right? Only if you're working out, your body will become nice, right? Ade marida, only if you work out, you can write the exams properly. So you'll be working out a lot of problems, and that is the core area where people, lack concepts and all. They will understand, but problem practice they will not do. So for that, okay, for this problem practice, we'll be launching a batch soon. So you can, mention in the comment section if at all you want to join that class. My team will, our team will contact you, and then you can join the batch. That will be starting, I think, around next month. Okay, for the September, around next month or next month. So we'll be starting that batch. Okay, so let me solve. Okay, let me solve. First thing, is the question paper easy or tough? People say. I will tell you honestly, okay, I will tell you honestly, the question paper was tough, okay, but the question paper was tough. Why I am telling tough now? A lot of new questions have asked, plus, okay, plus the question paper was lengthy. The question paper was lengthy, and the 3 hours la, if 50 marks, so 1.5 hours you have to, finish financial management. That 1.5 hours. So it actually took more than 1.5 hours to solve the problem. Okay, so that is the reason I will say tough, and a lot of new questions have asked. So people have actually cried, okay, after coming from the examination. A lot of people message me, sir, what has happened? The FM paper is the toughest paper, sir. Very tough, sir. Last, okay, in the last paper, so so they will put all the okay. So you have to be ready for the toughest question paper, okay. Even if the examiner is a sadist person and he is asking you a lot of tough questions, you have to be prepared for the toughest question paper, okay. So with this positive momentum, let us start, okay, let us start. Okay, so first question, okay, first question is a question from ratio analysis, okay. First question is a question from ratio analysis. Okay, so question number 1A is from ratio analysis. Okay, so they are giving you the following information. Always reading the question is more important than solving the question. 12.5% debt, 45 lakh is given. Debt to equity ratio 1.5:1. Return on shareholders funds 54%. Operating ratio 85%. Operating expenses to COGS is 2:6. Tax rate 25%. Fixed asset 39 lakhs. Current ratio 1.8:1. You are required to calculate interest coverage ratio, gross profit ratio, and current assets. Okay. So first one, interest coverage ratio. What is the formula for interest coverage ratio? The formula for interest coverage ratio is equal to EBIT divided by interest. Okay. Second one, GP ratio. What is the formula for GP ratio? GP divided by sales into 100. Third one, they asked for current assets. Okay. Third one, they asked for current assets. I am also giving you how to present, okay, how to present. Sir, my exams are over. I already said this is for the next batch students, okay, because this video will be there in the YouTube always, right, forever, so that next students can actually see the past exam solved questions. So that is the reason I'm doing it properly, 100% proper clarity. Now, you are required to calculate all these things. Okay, I always say ratios, how the approach should be. The approach should be first to see wherever absolute values are given and where you can use that absolute values. So two absolute values are given, okay, debt is given and fixed asset is given, okay, these two. So can you use debt anywhere? Okay, you can use the debt and debt to equity ratio. Okay, so first thing, so prepare a balance sheet, okay, prepare a balance sheet, working note. Now you first prepare a balance sheet. Balance sheet la you are having reserves and surplus engiyo kuduthirukangala. Okay, no, reserves and surplus has not given. Okay, so equity, debt and current liability, and right side fixed asset and current asset. So equity, shareholder funds, debentures and current liability. Here it will be non-current asset, which will be fixed asset and current asset. Any balance sheet for that matter, it will be like this only. Okay, it will be like this. Now here fixed asset is given. How much is fixed asset? 39 lakh. So 39 lakh fixed asset is given. Now let us do working note number 1. Working note number 1, 12.5% debt. Debt value is given, which is 45 lakh. Debt value is 45 lakhs. And debt equity ratio. So debt divided by equity. What is debt equity ratio? Debt equity ratio is 1.5 is to 1. Okay, so it is nothing but 1.5 divided by 1. Okay, so you know the value for debt. What is the value for debt? 45 lakhs. So 45 lakh divided by equity shareholder funds is equal to 1.5. So equity shareholder funds is equal to, okay, equity shareholder funds is equal to 45 lakh divided by 1.5. So what is 45 lakh divided by 1.5? It is equal to, okay, 45 lakh divided by 1.5 is equal to 30 lakhs. Okay, is equal to 30 lakhs. So therefore equity shareholder funds is equal to 30 lakhs. Always draw a dabba. What, sir, why you have to draw a dabba? See, only the examiner will be seeing the answer properly. Okay, so now equity shareholder fund is 30 lakh rupees. This is coming from working note number 1. Okay, so now, okay sir, now I know my equity. Okay, I know my equity. Now I have two unknown values, current asset and current liabilities, and I also have my current ratio. Two unknown values are there, and that two unknown values can you use somewhere? Okay, that is where I say absolute values, and check whether that absolute values can be used in some formula. So you have two values, current asset and current liability, unknown values, and you have current asset minus current divided by current liability is equal to 1.8 by 1. Okay, so current ratio கொடுத்திருக்காங்க. Okay, current ratio கொடுத்திருக்காங்க. So working note number 2, current ratio is equal to 1.8 is to 1. Okay, 1.8 is to 1. So which means current asset by current liability is equal to 1.8. So current asset is equal to 1.8 into current liability. Okay sir, as I know this, but balance sheet la equity shareholder funds plus debt plus current liability is equal to total asset, which is equal to fixed asset plus current asset. So which means equity shareholder funds plus debt plus current liability is equal to fixed asset plus current asset. So equity shareholder funds plus debt is nothing but 30 plus 45, which is 75 lakhs. Okay, so 75 lakh plus current liability is equal to, what is fixed asset? Fixed asset is 39 lakhs. Okay, so 39 lakhs plus current asset. Now what is current asset? Current asset is nothing but 1.8 into current liability. So 75 lakh plus current liability is equal to 39 lakh plus 1.8 current liability. Now this current liability will come here, this 39 lakh will come here, so which is nothing but 0.8 current liability is equal to 75 minus 39. What is 75 lakh minus 39 lakh? So 75 lakh minus 39, just 1 minute, 75 lakh minus 39 lakh is equal to 36 lakhs, is equal to 36 lakhs. So current liability is equal to 36 lakh divided by 0.8, divided by 0.8 panna we are getting is equal to 45 lakh. Appadina sir, current liability is equal to 45 lakh. Then what is current asset? Current asset is nothing but 1.8 into current liability. So 45 lakh into 1.8 is equal to, into 1.8 is equal to 81 lakhs. Okay, is equal to 81 lakhs. Appadina sir, current asset is equal to 81 lakhs. I got my current asset 81 and current liability is 45. Okay, so current asset is 81 lakhs and this is actually 45 lakhs. Total panna match aidum. So 45 45 90, 90 plus 30 is equal to 120 lakhs, correct? 90 plus 30 is equal to 120 lakhs. This is also becoming 80. Okay, 80 plus 40, which is nothing but 120. So 39 plus 81 is equal to 120 lakhs. Sir, why it is matching? Match pante dana nama value eduthuko. Only after matching we got the values. So now you got your current asset value. Current asset value is equal to 81 lakhs. Is equal to 81 lakhs. This you got from working note number 2. Correct? This you got from working note number 2. If this is a 5-mark problem, interest coverage will carry 2 marks, GP ratio will carry 2 marks, and current asset will carry 1 mark. So 1 mark you got in your pocket. Sir, avlo pante 1 mark. See, this is a lengthy paper. That's what I said. So now you got 1 mark. Okay. Next. Okay, I will be doing very quickly. Okay. Next, let us go into next mark. Okay. Next, working note number 3. Working note number 3. Okay. Let us draw the income statement also. So sales minus cost of goods sold is equal to GP. GP minus operating expense is equal to operating profit, is equal to operating profit. This operating profit is also called as EBIT. So EBIT minus interest is equal to earnings before taxes minus taxes is equal to PAT. Okay, this is what is my income statement. Now sir, next which information I have to use? Okay, so this information I have used, debt and equity information I have used, and current ratio information I have used, fixed asset information I have used. Now, sir, return on shareholder fund. So, return divided by shareholder fund. So, what is the return for shareholder fund? PAT is the return for shareholder fund. So, return on shareholder fund. Okay, return on shareholder fund, it is nothing but PAT divided by equity shareholder fund, which is nothing but 54 percentage. Okay, which is nothing but 54 percentage. I know my equity shareholder funds, correct? What is my equity shareholder funds? It is 30 lakhs. Okay, it is 30 lakhs. So equity shareholder fund is 30 lakh. So PAT is equal to 30 lakh into 54 percentage. Okay, wow. So 30 lakh into 54 percentage is equal to 16 lakh 20,000. Appadina sir, my PAT is actually 16 lakh 20,000. Okay, my PAT is 16 lakh 20,000. So now you know your PAT, like reverse calculation pante, you can actually find out. Sir, what is your interest? Your interest is 12.5 percentage debt, right, on 45 lakhs. So 45 lakh into 12.5 percentage panna, you got your interest, which is 5 lakh 62,500. So interest is 5 lakh 62,500. Okay, sir. Now I know my tax rate. What is my tax rate? My tax rate is 25 percentage. So after tax is 16 lakh 20. What is before tax? Okay. So earnings before tax is equal to, okay, PAT divided by 1 minus T, which is nothing but 16 lakh 20,000 divided by 1 minus 25 percentage. So 16 lakh 20,000 divided by 75 percentage. Panna, you are getting 12 lakh 15,000. Just 1 minute. 16 lakh 20,000 divided by 75 percentage. Okay, divided by 70, you are getting 21 lakh 60,000. You are getting 21 lakh 60,000. So earnings before tax is 21 lakh 60,000. So 21 lakh 60,000. Appadina, what is tax? That is 25 percentage, which is nothing but 5 lakh 40,000. Okay, reverse calculation. Okay, so if my EBT is 21 lakh 60, my interest is 5 lakh 20,000, then what is my operating profit? 5 lakh, which is nothing but, okay, interest plus EBT. Okay, interest plus EBT. So 21 lakh 60,000 plus 5 lakh 62,500 is equal to 27 lakh 22,500. This is what is my operating profit, correct? This is what is my EBIT, operating profit, 27 22,500. Sir, how you got your operating profit? Operating profit is nothing but EBT plus interest. Okay, EBT plus interest. So 21 lakh 60,000 plus what is my interest? Okay, what is my interest? My interest is 5 lakh 62,500. How you calculated? 45 lakh into 12.5 percentage. So how much is the amount that you are getting? 27 lakh 22,500. This is what is your operating profit. You know the operating profit also, and you know the interest amount also. So what is your operating profit? 27 lakh 22,500. What is your interest amount? Okay, what is your interest amount? Your interest amount is actually how much? How much, pa? 5 lakh 62,500. 5 lakh 62,500. So how many times interest coverage ratio? You will get 4.84 times as your interest coverage ratio. Okay, sir. So okay, out of 3, 2 requirement is over. So you will get 3 marks. So current asset is over and interest coverage ratio is over. Sir, I need gross profit. Okay, now I need gross profit, but I have only operating profit. So if I know operating expenses, gross profit easily can be calculated, correct? Okay, sir. Sir, how to calculate? Okay, I have used this information also. I have used the tax rate information also. Only these 2 information I have to use. Operating ratio and ratio of operating expenses to cost of goods sold. Okay, but here itself lot of people were stuck. Here lot of people were stuck. Now let's see. Working note number 4. Working note number 4. So operating ratio is equal to 85 percentage given. You all know that operating profit ratio is nothing but operating ratio 1 minus operating ratio. So operating profit ratio is equal to 1 minus 85 percentage, which is nothing but 15 percentage. I can also solve it using operating ratio, but this was one of the easiest thing. Okay, operating profit ratio 1 minus 85 percentage, which is 15 percentage. What is operating profit ratio? It is operating profit divided by sales is equal to 15 percentage. I know my operating profit, so I can calculate sales from here. Okay, so operating profit divided by sales into 100 actually is equal to 15 percentage. So what is my operating profit? 27 22,500. So therefore sales is equal to, okay, but therefore sales is equal to 27 lakh 22,500 divided by 15%, because sales will come here, 15% will come here. So what is my sales now? Okay, what is my sales now? My sales is 1 crore 81 lakh 50,000. Sir, I got your sales. Okay, 1 crore 81 lakh 50,000. But sir, still I cannot find out GP. Yeah, now here at least COGS I should know, or operating expense I should know. Only then I can calculate GP. Okay, only then I can calculate operating expense. Okay, sir, now what to do next? Okay, you calculated sales. What to do next? Okay, you know that your ratio of operating expenses to COGS is 2/6. Correct? So ratio of operating expenses to COGS is equal to 2/6. So 2/6 is nothing but 1/3. So COGS is nothing but 3 into operating expenses. Correct? COGS is nothing but 3 into operating expenses. Okay, so COGS is nothing but 3 into operating expenses. Okay, sir. Next, what I should do? Next, what I should do? Just 1 minute. Yeah. Now you know the operating ratio, correct? You know the operating ratio, which is 85%. What is operating ratio? Operating ratio, okay, operating ratio is nothing but COGS plus operating expenses divided by sales. What is operating ratio? 85%. Sir, I didn't know the formula, sir. Okay, you should have worked out this. Okay, so COGS plus operating expense divided by sales, and COGS is nothing but operating expenses, and sales amount you already know. So operating expenses with which you can find out. Okay, so COGS is nothing but 3 into operating expenses. So 3 into operating expenses plus operating expenses is equal to sales into 85%. Okay, is equal to sales into 85%. What is sales? 1 crore 81 lakh 50,000 into 85% panna, I am getting 1 crore 54 lakh 27,500. So 4 operating expense is equal to, so operating expense is equal to 1 crore 54 lakh 27,500 divided by 4. So divided by 4 panna, I am getting my operating expenses. What is my operating expenses? 38 lakh 56,875. 38 56 875. So 38 56 875. If this is my operating expenses, what is my GP? My GP is nothing but operating profit plus operating expenses, correct? Because idu rendu add pannada I will get. So plus 27 lakh 22,500 if I do, I will get my GP as 65 lakh 79,375. Then what is my COGS? My COGS is 1,81,050. Okay, 1 crore 81 lakh 50,000. So this becomes 1 crore 15 lakh 70,625. Okay, this becomes, okay, so now you know your GP. Okay, now you know your GP. Your GP is 65,79,375. How you calculated your GP? Your GP is nothing but operating profit plus operating expenses. Okay, on the table I'm just writing a formula so that person will know. Okay, the person who is examining, who will know. So what is your operating profit? You know that your operating profit is 27 lakh 22,500 plus 38 lakh 56,875. So you will get 65 lakh 79,000, correct? 65 lakh 79,375. So this is your gross profit, 65 79 375. So 65 lakh 79,375. What is your sales? So 1 crore 81 lakh 50,000. So into 100 panna, what is the amount that you're getting? 65 lakh 75,375 divided by 1 crore 81 lakh 50,000. You are getting exactly 36.25%. So this 36.25% is the gross profit. Hence, then you will get 5 marks. Okay, then you will get 5 marks. See, we took a lot of time because I'm also explaining and I'm also writing. So 36.25% is the gross profit ratio. You can use any method. Okay, you can use any method. Some people would have done some long method, but I think this is the shortest method. If you have some other short method, you can tell in the comment section also. Okay, so this is the GP ratio. Okay, so this is the GP ratio. So with this, problem number 1 is completed. 1A. Okay, 5 marks is completed. Sir, let us do problem number 2. Okay, quick problem number 2 nama pannalama. Okay, problem number 2. So Alpha Limited, this 15% debentures, variable cost, fixed cost. So recent policy changes, sales, so taxes 20%. Find out operating leverage and financial leverage separately, and also find out what will happen to my EPS if my sales is decreasing by 15% and 20%. Typical leverage problem very easy. So first find out operating leverage, financial leverage and combined leverage, and they are asking what is the impact on EPS because of change in sales. So change in sales and EPS, actually combined leverage formula will come. So combined leverage change formula, which you can actually find out the new EPS. Okay, so let us do question number 1B, which is actually a leverages problem. Okay, which is actually a leverages problem. Okay, so rupees in lakhs panirla, we will just do rupees in lakhs. So I will just write down the first income statement first. Sales minus variable cost will become contribution, minus fixed cost will become EBIT. Okay, minus interest will become earnings before taxes. Then minus taxes will become PAT. Okay, so now first, okay, what is sales? Sales is 50 lakh into rupees 20 per unit, correct? So 50 lakh into 20 per unit, it is nothing but 100 lakh. Okay, 50 lakh into 20 per unit is 100 lakh. What is your variable cost? Variable cost is 12.5 per unit, correct? So how much unit? 50 lakh units into 12.5. So how much is the amount? The amount is 625 lakhs. So what is my contribution? My contribution is 375 lakh. Okay, what is my fixed cost? Fixed cost is 175 lakhs. So apdiye 175 lakh is your fixed cost. What is your EBIT? Your EBIT is 200 lakh. Okay, next, what is your interest? 15% debentures, 10,000 debentures and 750 rupees per share into 15%, but I want in lakhs, so divide by 1 lakh pannu, correct? So idana eppadi sir calculate pannu? So 10,000 debentures into 750 per debenture. Okay, 750 per debenture. So into 750 per debenture into how much percentage? 15%. Okay, into 15%. This will be my like my total interest. So I just have to do divide by 1 lakhs. Okay, I just have to do divide by 1 lakh because I have amount in lakhs. Okay, so 10,000 into 750 into 15% divided by 1 lakh panna, I am getting 11.25. So my interest is 11.25. Now what is my earnings before taxes? My earnings before taxes is 188.75. Okay, earnings before 188.75. Now what is the taxes? 20% taxes. So into 20% into 20%. Okay, so 188.75 into 20% is 37.75. So 37.75 panna, you will get your PAT. Okay, you will get your PAT as 151. Okay, you will get your PAT as 151. Now divide this by number of equity shares. Okay, divide this by number of equity shares. Sir, how many equity shares? 25,000 equity shares you are having, correct? 25,000 equity shares you are having, and all the shares are 100. Okay, 100 per share. Okay, the shares are 100 per share. 25,000 and 100 per share. Okay, 25,000 and 100 per share. Correct? 25,000 shares you're having, amounts are in lakhs, correct? So number of equity, so this is 151 lakhs. 151 lakhs. So I will also convert that into lakhs, so my EPS will also be in lakhs, correct? Earnings per share, 25,000 shares into rupees 100 per share. So I am having 25,000 shares, correct? Yeah. So this is 151 lakhs. Okay, my PAT is actually 151 lakhs. Okay, whenever you're getting confused, just do it casually. Okay, so EPS is equal to 151 lakhs is my profit, and I am having only 25,000 shares. Okay, correct? I am having only 25,000 shares. So divided by 25,000, what is my EPS? Okay, a lot of people would have done 25 apply into 100 port, divide by 1 lakh potrupanga. Okay, but that is one mistake. 151 lakhs divided by 25,000 panna, I am getting my EPS as 604, correct? So my EPS is actually 604 rupees. 604 is my EPS. Okay, rupees 604. So because 151 lakh is my profit, 151 lakhs is my profit, and on the profit like 25,000 shares, so per share my EPS is 604. Okay, is 604. Now with this you can actually calculate operating leverage, financial leverage and the combined leverage. Okay, so operating leverage is equal to contribution divided by EBIT, financial leverage is equal to EBIT divided by EBT, combined leverage is equal to contribution divided by EBT. Okay, so what is your contribution? What is your contribution? Your contribution is 375. So 375 is your contribution. EBIT is 200 lakhs. What is your EBIT? 200 lakhs. What is your EBT? 188.75. What is your contribution? 375. What is your EBIT? 188.75. Okay. So what is your what is your operating leverage? 1.875 times. Okay. So what is your financial leverage? 1.0596. And what is your combined leverage? 1.9868 is your combined leverage. Okay. Now you found out. Now next question, what they're asking, if my sales is reducing, okay, but declining, if my sales is reducing by 15 or 20 percentage, then what will be the impact on my EPS? Okay, so first one, sales is decreasing by 15 percentage. Okay, sales is decreasing by 15 percentage. Which leverage? Combined sales and EPS, combined leverage. Okay, so combined leverage is equal to percentage change in EPS divided by percentage change in sales. So what is my combined leverage? 1.9868. Percentage change in EPS is something that I want to find out. So percentage change in EPS divided by what is my percentage change in sales? 15, correct? So my percentage change in EPS is equal to 15 into 1.9868. 15 into 1.9868 29.802 percentage. So my EPS will be reducing to 29.802 percentage. So what will be my new EPS? My new EPS is nothing but that old EPS. What is my old EPS? 604. Okay, so from 604 1 minus 29.802 percentage na panna. Okay, so 604 minus 29.802 percentage na panna, I will get 424 rupees. So 424 rupees is my new EPS. Okay, ade mari second one, if my sales is reducing to 20 percentage, what I am going to do? Okay, so combined leverage. So first directly you can write. Okay, directly you can write percentage change in EPS is equal to 20 into 1.9868, correct? Because now the leverage is 20. So 20 into 1.9868. So what is the percentage? 39.736 percentage. So 39.736 percentage. So the sales is reducing to 39.76 percentage. I mean, if sales is reducing by 20 percentage, EPS will reduce to 39.736 percentage. So what will be your new EPS? Your new EPS is equal to 604 into 1 minus 39.736 percentage. Just put in your calculator 604 minus 39.736 percentage. You will get 364 rupees. You will get 364 rupees. Hence, this is one more 5-mark problem. Okay, this is one more 5-mark problem. Very easy problem. This is the standard problem that we usually do in class. Okay, but small, okay, here and there small points are there. Now sir, C. Okay, C. Oh yo sir, C. Yenna sir, annual sales 90 percentage on credit, which is 7 crore 50 lakh, credit period 45 days, average collection period 70 days, bad debts 0.75 percentage, credit administration cost adala 2/5 is avoidable. Okay, 2/5 is avoidable. So 2/5 is avoidable. So factor firm has offered to manage the company's debtors on a non-recourse. So it is a factoring problem, non-recourse basis. Non-recourse basis na bad debt will be borne by the factor agent itself at a service charge of 2%. So the factor fees is 2%. He is agreeing to grant an advance at an interest rate. Okay, so he will give advance, adake he will charge 14% interest and he will withhold 20% as reserves. So he will give only 80% amount as advance. So payment period guaranteed by the factor is 45 days. Actually my credit period is 70 days, but he will give me 45 days. So my actually period is reducing. So the cost of capital of the company is 12.5%. One time redundancy payment I have to make for 50,000 rupees and calculate the effective cost of factoring. Now a lot of people leave factoring problems and all, but okay, now we are going to discuss this factoring problem. Okay, factoring problem. So question number C is from management of receivables. Is from management of receivables. Working capital ஒரே problem தான் கேட்டிருக்காங்க, that too from management of receivables and that too a factoring problem. Okay, that too it is a factoring problem. I already said in my class that management of receivables, any problem, it is always a cost benefit analysis. Okay, it is always a cost benefit analysis. No, they are not asking the cost, they are asking the effective cost. So which means they are asking in percentage. Percentage are also always calculated in per annum. So adanala we will be doing the cost benefit analysis per annum, okay, not per cycle. Per annum we will be calculating. Okay, first benefit. Okay, first benefit. Sir, what is the benefit that we will be having? Okay, what will be the benefit that we will be having? அப்படியே நம்ம பார்க்கலாம். First thing, I will be saving this administration cost, correct? So this is my benefit. I will be saving this bad debts. So this is my benefit, correct? My collection period was 70 days, but now factor will give me my money in 45 days. So actually, if you see, my debtors investment is reducing. So return on this debtor investment is also a benefit, correct? This is also a benefit. What is my cost? Service charge of 2% I have to pay, correct? This is my cost. And he is giving me some advance. Adukku na 14% interest pay pannu. This is again my cost. Okay, this is again my cost. This one-time redundancy payment of 50,000 I have to pay, correct? This is my cost. So okay, so I have 3 benefits and I have 3 cost here. Okay, first write me the benefit. Okay, first I will write the benefit. First one, okay, first one. Ayyo. Okay, so first one, savings in administration cost. Okay, savings in administration cost. Now read. Credit administration cost is actually 18,60,000. Adula 2/5 is avoidable. Appadina 3/5 is not avoidable. Correct? 2/5 because of factor coming, 2/5 I can avoid. Okay, 2/5 I can avoid, but 3/5 I cannot avoid. So amount that I can avoid, that is my savings, correct? Because of the factoring agreement, I can avoid 2/5 of the cost. So avoiding 2/5 of the cost is nothing but I'm saving that 2/5 of the cost. So 18,60,000 2/5 is saved. So 18,60,000 into 2 divided by 5. Okay, into 2 divided by 5. So what is 18,60,000 into 2 divided by 5? It is actually 7,44,000, correct? 7,44,000. So this is one benefit. Okay, but this is one benefit that I'm having. Okay, sir, what is the next benefit? Sir, bad debts I will be reducing, correct? My bad debts will be reduced. So savings in bad debts. It is a non-recourse agreement. So non-recourse agreement means the bad debt loss will be taken by the factor. So that is the reason I am benefiting. Okay, so savings of bad debts. Okay, savings of bad debts. Why? Because it is a non-recourse agreement. Either recourse agreement in the bad debt savings will not be there. Okay, so non-recourse agreement. Okay, bond. So what is my credit sales? 7 crore 50 lakh 90%. So 7 crore 50 lakh into 90%, because bad debt will come only on the credit sales, into 0.75% is the bank is the bad debts. So appdi panna, what is 7 crore 50 lakh into 90% into 0.75% is actually 5 crore 6 lakh 750. Okay, 5 crore 6 lakh 750. Okay, sir, next one. My debtors for 70 days will be what, and my debtors for 45 days will be what? Okay, so I am having a savings of this 70 and 45. So 55, 65, and the 25 days savings I'm having, correct? And the 25 days savings I'm having. On the 25 days savings in the investment in debtors, I will be saving 12.5%, correct? See, இப்போ நம்ம management of debtors and the credit policy selection what we were seeing, 30 days this is the investment in debtors, 60 days this is the investment in debtors. So when the investment in debtors is increasing, my investment in when my credit period is increasing, my investment in debtors will also increase. Because my investment in debtors is increasing, my interest cost is also increasing. That is a cost there, correct? That is a cost there. Why there is a cost? Because the interest is, because the debtor period is increasing. Here the debtor period is reducing, adanala this is becoming a benefit, correct? So this is my benefit. So this is nothing but savings in interest. Okay, but this is nothing but savings in interest, or I can also call as a return. Okay, but savings in interest for reduce in investment. Okay, but for reduce in investment on debtors. Okay, by investment of debtors, you actually know how to calculate debtors, correct? You actually know how to calculate debtors. The credit sales divided by 360 days into the debt collection period, correct? Into the debt collection period is debtors. So into the debt collection period for 70 days and into the debt collection period for 45 days, that is the reduce in investment in debtors. Adala I have to apply this 12.5%. I will get my, okay, I will get my savings in interest for reduce in investment of debtors. So which means 7 crore 50 lakh into 90% credit sales. So credit sales na divided by 360 panna I will get. Why 360? Yana it is given. Assume 360 days. Okay, divided by 360 into my debt collection period for 70 days minus this. So abdina I can actually put 70 minus 45 directly. So this is nothing but reduction of my investment in debtors. 70 minus 45. Adla I will be earning 12.5 percentage. Okay, Adla I will be earning 12.5 percentage. So this is my savings. So 7 crore 50 into 90 percentage divided by 360. Okay, so 7 crore 50 lakh into 90 percentage divided by 360 into 45, 55, 65, 70 into 25 into 12.5 percentage. You are going to get 5 crore 85 lakh 937. So 5 crore 85 lakh 937.50. This is my total benefit. So if I add the total benefit, I am getting 18 lakh 36,187.50. Now let us reduce the cost. Okay, now let us reduce the cost. First cost will be, okay, first cost will be the factoring cost. Factoring cost for the total creditors. Okay, for the total creditors I have to pay the factoring. Sir, whatever is my receivables adukku dana sir na factoring cost pay pannu. See, factoring cost will be paid on the debtors value, agreed, but this I am calculating for the entire period. Okay, this I am calculating for the entire year. So entire year what will be my factoring cost? It will be on total credit sales. So this is nothing but, okay, but this is nothing but 7 crore 50 lakh into 90 percentage, that is the credit sales. On that credit sales I have to pay 2% interest. Okay, but 2% in 2% factoring fees. So that will come to 13 lakh 50,000 I have to pay as the factoring fees. Okay, I have to pay a factoring fees. Now what is the second cost? Oh, I have to pay a one-time fee of 50,000. That is the second cost. Okay, so one-time fee of 50,000. Now I have to pay interest also. Interest working note put. Okay, interest two assumptions will be there. Okay, first thing is upfrontly you are paying the factoring fees, or factoring fees is paid afterwards. So usually the easier calculation is factoring period paid afterwards. So interest, sir, how to calculate interest? Okay, how to calculate interest? See, first thing you can calculate the receivables. Correct, receivables is nothing but 7 crore 50 lakhs into 90% divided by 360 days into what is your credit period. Your credit period is actually 70 days. So you are having a receivables of 1 crore 31 lakh 25,000. So which means your average receivable is 1 crore 31 lakh 25,000. So this is the receivable that your factor will be taking care. Now what he is telling, okay, what he is telling, adala 20% he will have as reserve, correct? As 20% he will have as reserve, and 80% alone he will give us advance, correct? 80% alone he will give us advance. So what is the advance amount? What is the advance amount? Advance amount is 1 crore 31 lakh 25,000. 20% he will keep, 80% he will give us advance. So into 80% is nothing but 1 crore 5 lakh rupees is the amount that he will give us advance. So on this advance of 1 crore 5 lakh rupees, so 1 crore 5 lakh rupees he will give me. On that I have to pay him 14%. Okay, I have to pay him 14%, and I will be taking full year calculation. Okay, so now what will be the interest? Okay, what will be the interest? It is nothing but 1 crore 5 lakh into what percentage is your interest? 14% is your interest. Okay, so into 14%, what is your interest amount? Your interest amount is 1 crore, so 14 lakh 70,000. Sir, avlo interest pay pannuma, avlo interest pay pannu. 14 lakh 70,000 rupees is your interest. Okay, now if you do this benefit minus cost, okay, so total benefit minus total cost, definitely it will be net cost. Okay, definitely it will be net cost. So what is your net cost? It is 10 crore 33 lakh 812.50, but they have not asked you net cost. They have actually cost you effective cost of factoring. So what is your effective cost of factoring? Which means for the amount that you're getting, what is the cost that you're paying? The cost is nothing but, okay, that is nothing but net cost per annum, okay, divided by the advance amount. Okay, but that is the amount that you're receiving. So for this advance amount you have to spend so much, correct? So what is the net cost per annum? 1033,812 1033,812.50 divided by what is your advance amount? 1 crore 5 lakh. Okay, but 1 crore 5 lakh amount is something that you're receiving. So actually it is divided by, okay, so 10 lakh 33,812.5 divided by 1 crore 5 lakh panna, you are actually getting 9.85 percentage. Okay, 9.85 percentage is the answer. And here interest calculation can be little different also if you're taking a different assumption. So from this advance amount you can actually reduce the fees also, and from that fees also you can calculate the interest amount. Okay, but that is the second assumption. Both the assumptions will work. Okay, so question number 1 is completed. Question number 1 is completed. Okay, quickly we will do question number 2. Okay, quickly we will do question number 2. Actually question number 2 is very easy. Okay, but question number 2 is, let us read the problem. Capital structure is given. This is the capital structure. Additional information. So convertible debentures is given, rupees 100 each on 1/4/2023 with a maturity period of 6 years. So at the maturity it will have an option to convert the debentures into equity shares of 1. So for every 1 debentures they will get 4 shares. Market price of the equity share now 31/3/2024. Always see the date. Okay, so 31/3/2024 is actually now. So market price now is 25 and the growth rate is 6% per annum. Okay, 6% per annum. So this is, we have to find the cost of convertible debentures. Then preference stock redeemable after 8 years is currently selling at 150. So redeemable after 8 years. Okay, so preference stock now is redeemable after. So balance life is 8 years. And prevailing default risk-free rate is, so risk-free rate RF is 6%, market risk premium, so RM minus RF is 8%, beta is 1.54. You can calculate the cost of equity. They are asking you to calculate the cost of equity, cost of preference shares, cost of convertible debentures, cost of retained earnings, and cost of term loan. Corporate tax is 25% and personal income tax is 20%. Sir, why personal income tax is given? To find out the cost of retained earnings. I have already said how to calculate cost of retained earnings. Now, okay, question number 2A. First one, they are asking cost of equity. Cost of equity, the formula is very simple. Risk-free rate, correct? First one, they are asking cost of equity. So risk-free rate plus beta into RM minus RF. How to present answer? Always write risk-free rate. Okay, but what is risk-free rate? Your risk-free rate is actually 6%. Okay, but market premium RM minus RF. What is your market premium? Your market premium is actually given as 8%. 8% is the market premium, not RM. Okay, but RM na they would have given market portfolio or market return. Premium na RM minus RF. Lot of times I have discussed this. Okay, so 8% here. So this is 8% here. What is your beta? Okay, what is your beta? Your beta is 1.54. Your beta is 1.54. So you have all the values. Okay, you have all the values. So 6% plus 1.54 into 8%. So what you will get? 1.54 into 8% is actually this. Then you are getting 18.32%. Okay, 18.32% is your cost of equity. Second one, sir, cost of preference shares. Okay, cost of preference shares. Cost of preference shares. Okay, so you have to put the that formula. Okay, approximate formula. Preference dividend plus RV minus NP divided by N, the whole divided by RV plus NP divided by 2. Okay, but divided by 2. So what is your preference dividend here? Your preference dividend is nothing but 100 less 15%. So it is 100 less 15% is 15. 15 is preference dividend. What is your redemption value? So it is currently selling at 150, redeemable after 8 years. Nothing is given, a redemption value is 100. Okay, so redemption value is 100. Net proceeds. Net proceeds now you have to write either, if this is a if this is new issue now you will write the issue price. If it is current preference share, you have to write the market price. So market price is 150 per share. So into minus 150 divided by, it is redeemable after 8 years. So from now after 8 years now remaining life is 8 years. Okay. So divided by 100 plus 150 divided by 2. So this becomes negative. Okay, so appadina 15 minus 50 divided by 8. Okay, 15 minus 150 divided by 8, you are going to get this value 15, and that is 7%. Okay, but this is actually nothing but 7%. So 100 minus 150 divided by 8 panna, you will get negative 6.25 plus 15 panna, you will get 8.75. Okay, so 8.75 divided by 250 divided by 2. Okay, 250 divided by 2 is nothing but 125. Correct? So 8.75 divided by 125, you will get 7%. Okay, okay, next, third one. retained earnings. Okay, cost of retained earnings is nothing but cost of equity into 1 minus personal income tax into 1 minus flotation cost, and a flotation cost is not given, so another 1 minus personal income tax. What is cost of equity? Cost of equity is 18.32 percentage. It is 18.32 percentage into 1 minus what is your personal income tax? Your personal income tax is 20 percentage. Okay, so 18.32 minus 20 percentage, you will get 14.66 percentage. So 14.66 percentage is your cost of retained earnings. Okay, next one. Okay, cost of convertible debentures. Debentures or convertible debentures, first write the formula. I into 1 minus t plus RV minus NP divided by N, the whole divided by RV plus NP divided by 2. Okay, but divided by 2. First, what is the interest? Okay, first, what is the interest? Interest is 100 la 13 percentage, so 13 rupees is the interest. Okay, in 13 rupees is the interest. Tax, you know. Okay, but tax, you know, it is 25 percentage. Okay, but 25 percentage. Don't take personal income tax, corporate tax. Okay, corporate tax 25 percentage. So tax is equal to 25 percentage. N is equal to remaining life. Okay, N is equal to remaining life. What is the remaining life? If you see here, issued 100 on 23. To 23 they are issuing with a maturity of 6 years. So 1 year before, correct? Right now it is 24. 23 they issued for 6 years. Now today the remaining life is 5 years, correct? So N is equal to 5 years. Lot of students did a mistake here. Up 6 years போட்டிருப்பாங்க, correct? I know you have done that mistake. Okay, அதனால தான் நான் கிளாஸ்ல கத்தி, okay, I'm shouting in class, so you read the problem properly. So N is equal to 5 years. Okay, N is equal to 5 years. Okay, now what is the redemption value? Redemption value, it is redeeming in shares. Okay, it is redeeming in shares, and that too it is redeeming after at maturity after 5 years. It is redeeming after 5 years. So what is the market price per share after 5 years into 4 shares that I am receiving, correct? So right now my market price is how much? My market price is 25, correct? And that 25 I have to go for next 5 years to find out the market price per share after 5 years, and that 5 years value I will get into 4 per share. Okay, so 25 rupees is the market price per share into 1 plus growth rate. What is the growth rate? It is growing at what rate? 6 percentage rate. 6 percentage rate for 5 years it will grow, correct? So today and after 5 years, in a lot of people would have done 6 years, correct? So into is equal to 6 years into 4 panna, I will get my redemption value. Okay, so 25 plus 6 percentage 1 year plus 6 percentage 2 year plus 6 percentage 3 year plus 6 percentage 4 year plus 6 percentage 5 year into 4, you will get 133.82, correct? You will get 133.82. 133.82 is the redemption value. Now what is the net proceeds? Okay, what is the net proceeds? Now current market value of the debenture, nothing is given, correct? So current market value of equity is given 25, so into 4 panna 100 rupees, or nothing is given, assume it is face. Okay, assume it is face value, so 100 rupees. Okay, so net proceeds, assume it is 100, no information it is given. Okay, so now 13 into 1 minus 25 percentage plus RV minus NP. So 133.82 minus 100 divided by 5, the whole divided by 133.82 plus 100 divided by 2. Now if you do this, you will get, okay, if you do this, you will get the cost of debt as 14.125 percentage. Okay, but that is what is your cost of debt. Okay, that is what is your cost of debt. Okay, so next one, cost of debt kapro, then what is the thing? Cost of debt is over, cost of retained earnings is over. Next is cost of term loan. Okay, but next is cost of term loan. So cost of term loan is nothing but interest into 1 minus t, correct? Loan la interest paper, no, that interest 1 minus t. Redemption is at par only, always term. So 11. So 11 percentage into 1 minus 25 percentage, which is nothing but 8.25 percentage is your cost of term loan. So with this question number, okay, with this question number 2, part A is over. Now let us go to part B. Okay, part A is over, you will get 5 marks. Okay, part B, oh, arbitrage problem. Okay, part B, arbitrage problem. Okay, so data levered to unlevered. So levered to unlevered, it is called as primary arbitrage. Okay, it is called as primary arbitrage. See, if you want to learn this arbitrage concept properly, okay, I have a video. I have a video in my channel, okay, in my channel Tawfiq Tufail. Okay, this is the channel THOFIK TUFEL. In there, MM, okay, in that MM arbitrage concept, 2.5 hours video. In that 2.5 hours video, arbitrage A to Z 100% concepts covered. If you see that video, you will never get any doubt in the arbitrage problem. Okay, you will never get doubt any in arbitrage problem, and no tough questions are possible. It is like a standard format problem that can be asked. So arbitrage, okay, this is a primary arbitrage. Primary arbitrage I have solved in 5 steps. Okay, so that video you see, okay, for this, that video you see, okay, the same problem they have asked, the numbers alone changed. Okay, number alone changed. So if you solve that problem, you will actually get your arbitrage profit as 403.75. 403.75. Actually, I can actually solve this problem now also. It will take me another 15 minutes more. Okay, but the video will become long. So that is the reason I'm referring to you one more video. That 2.5 hours video will give you the entire, because I know, okay, 10 out of 9 students leave this concept of arbitrage. 10 out of 9 students. Yeah, me as a student also left, because it is very rarely asked in the examination. But if the examiner is a sadist person like me, then what will do? He will put the tough questions only. So for that, okay, you have to be prepared. So 403.75 is the arbitrage profit, which is nothing but the increase in earnings. So this is the answer. If you solve that, you will get the answer. Okay, I have solved this. So now question number 3. Again, question number 3 is actually an easy problem. Okay, but question number 3 is actually an easy problem. Okay, let us read. It is a leading manufacturer of railway parts for passenger coaches and freight wagons. Due to high wastage of material and quality issues, the general manager replacing machine A. So machine A is having a book value of 4,80,000, remaining economic life of 6 years. So 6 year more is having. So now this 4,80,000 can be sold at 1,80,000. So 4,80,000 is the book value. It can be sold at 1,80,000. There is a capital loss. There is a capital loss of 3 lakh rupees. So if there is a capital loss of 3 lakh rupees, you will get a tax benefit. Okay, you will get a tax benefit. But always read this. Okay, well, ignore tax saving on law, or ignore tax saving on loss due to sale of existing machine. So you have to ignore that. Okay, well, otherwise this, if this sentence is not there, then the tax savings will also come. The 3 lakh rupees is the tax saving rate, that will also come, but they have written ignore. Okay, well, so this book value I will not consider now, because they itself told to ignore. Okay, next one. Okay. The purchase price of machine B is 24 lakhs. Economic life, it will require 1,40,000 for installation and 60,000 for testing. Subsidy will be receiving 15% of the purchase price, and it will be receiving at the end of the first year. Okay, so you will receive subsidy at the end of the first year. So it is like a capital receipt. So no tax impact will come. Okay, always remember. So adnala NPV calculation in the last cash flow you have to write. So general manager estimates that annual savings will be 1,68,000 for 3 skilled workers. So 1,68,000 into 3, 4,80,000 from the reduced material, and 3,50,000, okay, from the loss in sales and delay. Okay, so operation from machinery B will require services. So this is the benefit, and this is, this is the benefit, and this is the cost. So 3,90,000, one trained technician, and annual maintenance cost will increase 1,40,000. So incremental benefit and incremental cost, both details are given. Tax rate is 30%. Required rate of return is 14%. Company follows a straight line method of depreciation. Okay, I always say capital budgeting problem, okay, do in 3 steps. Okay, step 1, initial cash flow. Okay, step 1, initial cash flow. Initially you will receive the cash flow. Okay, was sale of old machinery. Sale of old machinery. What is the sale of old machinery? That old machinery can be sold at 1,80,000. Correct? 1,80,000. So 1,80,000. It is your, so is this your inflow? That is the reason I'm writing as positive. Next, purchase of new machinery. Okay, purchase of new machinery. Actually, because of this sale, you will also get a tax benefit. That will be an inflow. But tax benefit I'm ignoring. If the tax benefit will come now, 3 lakh into, what is the tax rate? 20%. 30%. So 3 lakh into 30%, 90,000 will also be a benefit, but that 90,000 amount I'm ignoring. Okay, but that 90,000 amount I'm ignoring. So purchase of new machinery, I'm purchasing at 24 lakh rupees. So minus 24 lakh rupees. Now after purchasing, you will be having this cost. Okay, for cost of installation and cost of testing. Okay, cost of installation and cost of testing, 1,40,000 and 60. So installation testing is again an outflow, 1,60,000 and 40, 2 lakhs. Installation and testing, 2 lakh rupees. Okay, installation and testing, 2 lakh rupees. That is what is happening in the first year, correct? Okay, that is what is happening in the first year. Okay, okay, so first year you're actually outflow. Okay, but year 0, your year 0 outflow is 1,80,000 inflow minus 24 lakh outflow minus 2 lakh outflow. So your outflow is actually 24,20,000. Okay, but 24,20,000, correct? Hmm. Okay, so 24 lakh 20,000 is your outflow. Next, annual cash flows. Okay, next, annual cash flows. So year 1 to 6. Okay, year 1 to 6. Yeah, now from 1 to 6th year you have to see. First one, okay, first one, what is the benefit that you're getting? Okay, what is the benefit that you're getting? So incremental benefit, okay. So incremental benefit you are getting from salaries, okay, from material and from okay, annual savings, okay, annual savings due to skilled workers, okay, so annual savings in salaries, annual savings in wastage of materials and loss in sales, okay, and savings in loss in sales, okay. So that is the contribution. So incremental benefit you're having in three places, correct? You're having in three places. So wages and salaries you're having, okay, and defective material you're having some savings, and then this savings in loss of sales, okay, savings in loss of sales. You're having three benefits. What is the three benefits? 1,68,000 for three skilled workers. So 1,68,000 into 3. So 1,68,000 into 3 is equal to actually 5,04,000. So many people would have done this mistake. Apdiye 1,68,000 putting. If you have done that mistake, put in the comment box. Whatever the mistake that I've discussed, right? Whatever the mistake that you did, you put it in the comment box, so that students, the new students who will see the comment box, will get to know what are the mistakes that you did. I always say, learn from your mistakes. Okay, learn from your mistakes or learn from others' mistakes. So people have wrote the examination, write what are all the mistakes that you did, so that the people who will writing afterwards will be learning from your mistake. Okay, you will getting some punyam. So 1,68,000, 4,80,000, and one more benefit of 3,50,000. Okay, one more benefit of 3,50,000. Other there will be some cost also. Okay, operations of the machinery, annual salary extra 3,90,000, and maintenance cost. Okay, so an incremental cost on salary and maintenance. Okay, so salary 3,90,000 and 1,54,000. 3,90,000. Okay, one trained technician, correct? 3,90,000 and 1,54,000. 3,90,000 and 1,54,000. Okay, 1,54,000. I should also write incremental increase in depreciation, because right now my book value is 4,80,000. This 4,80,000 divided by 6, now every month, every year my depreciation would have been 80,000. Okay, would have been 80,000. But now what would be my depreciation? My depreciation will be different, correct? So there is an increase in depreciation. Because of that increase in depreciation, I will be having a tax benefit also. Are you all getting correct? A tax benefit on increased depreciation is also like an inflow, right? Yes or no? Correct? Okay, so this is my incremental benefit, and the incremental benefit I will also be having a tax impact. Okay, I will also be having a tax impact. Just 1 minute. Am I doing correct? Yes, I am doing correct. Okay, I am doing correct. Okay, now what will be my increase in depreciation? Okay, what will be my increase in depreciation? Okay, first thing, okay, every year, first, what is my new depreciation? Okay, what is my new depreciation? 24 lakh minus your salvage value of 3,20,000, correct? So 24 lakh minus 3,20,000 divided by 6, correct? This is my new depreciation. Okay, but this is my new depreciation. 24 lakh minus 3,20,000 divided by 6, which is nothing but 3,46,667. And what would have been my old depreciation? Because that is what is my increase in depreciation, and this increase in depreciation is actually my outflow, correct? Because outflow, increase in depreciation. Now my depreciation was, that is my savings, 4,80,000 divided by 6. No scrap value. So 4,80,000 divided by 6. So 4,80,000 divided by 6. So it is nothing but 24 lakh minus 3,20,000 minus 4,80,000 divided by 6. You are getting actually a cost of 66,667. Okay, wow, this is nothing but the earnings before taxes. Okay, wow, this is nothing but the earnings before taxes. So here you will get some tax expense. Okay, wow, this increase in depreciation, you will get some tax benefit also. So earnings before taxes. So 5,04,000 plus 4,80,000 plus 3,50,000 minus 3,90,000 minus 1,54,000 minus 2,66,667. You are getting 5,23,333. Okay, from here you have to pay taxes at the rate of 30%. So into 30%, if you do the taxes, you will get 1,57,000. Okay, correct? 1,57,000 is your taxes. Then this will be your profit after taxes. Okay, but this will be your profit after taxes. This is nothing but, okay, 5,23,333 minus 1,57,000. 1,57,000. You are getting 3,66,333. From here, if I add back the depreciation, which is 2,66,667 plus 2,66,667, I will be having my cash flow after taxes. Okay, I will be having my cash flow after taxes, which is nothing but 6,33,000. Okay, this is my cash flow after taxes for 1 to 6 years. Okay, the first year you also have a subsidy, that you should not forget. Okay, now cash flow after scrap value, terminal cash flow, correct? Now terminal cash flow. Terminal cash flow, what is something that you're receiving? Okay, at the end of the project, you will be receiving this scrap value, correct? You will receiving this scrap value. Where is the scrap value, pa? It could be sold at 1,90,000. Sixth year, the value is 3,20,000, correct? So this is year 6. The scrap value, you will receive scrap value as how much? 3,20,000. So do you have any working capital investment? No working capital investment. Okay, so nothing is there. And year 1, so nothing is there. Now calculation of NPV. Okay, calculation of NPV. Okay, NPV. So now NPV nala year. Okay, year, the particulars, whatever is the particulars, then cash flow. Okay, then present value factor or present value annuity factor, then discounted cash flow. Okay, so year 0. Okay, year 0 initial cash flow. Okay, what is your initial cash flow? Year 0 investment 24,20,000. Okay, so 24,20,000. Year 0, this is the present value, so 24,20,000. Now year 1 to 6. Okay, annual cash flows. What is your annual cash flow after taxes? 6,33,000. So here you have to write present value annuity factor, correct? Present value annuity factor is அப்படியே 1 to 6 நீ add பண்ணிடணும், correct? So 0.877 plus 0.769 plus 0.675 plus 0.592 plus 0.519 plus 0.456. So you will get 3.888. Okay, but you will get 3.888. This 3.888 into 6,33,000, you will get 24,61,104. Now first year you also have an inflow, correct? Inflow of subsidy. Okay, inflow of subsidy. This 15% on the purchase price is your savings, correct? This 15%, this 15%. Where is that? Yeah, subsidy of 15% on the purchase price of machinery B. So this is your savings, correct? This is your savings that you will be getting. So what is the purchase price? 24 lakh into 15%. 24 lakh into 15%. 3,60,000 you will get in the first year. So 3,60,000 is your first year inflow. So first year inflow, first year discounted value 0.877. 0.877. So into 0.877 panna, you will get an inflow of 3,15,720. Okay, 3,15,720. Next, 6th year. Okay, 6th year you are also having a terminal cash flow. Okay, you are also having a terminal cash flow of 3,20,000. So this amount you will receive in the 6th year. Okay, so 0.456. 0.456. Okay, so 3,20,000 into 0.456 is equal to 1,45,920. All the values you have considered, and nothing you left, correct? And nothing you left. All the values you have considered, correct? All the values you have considered. So this is the cash outflow and this is the cash inflow. Okay, so this is nothing but NPV. Okay, this is nothing but NPV. So how to calculate NPV, sir? Okay, 24,61,104. 61,104 plus 3,15,720 plus 1,45,920 minus 24 lakh 20,000. You will get your NPV as 5,02,704. Okay, 5,02,744 rupees is your NPV. NPV is nothing but discounted cash inflow minus discounted cash outflow. How? NPV is equal to discounted cash inflow minus discounted cash outflow. What is the discounted cash inflow, or the plus values are the discounted cash inflow? 24,61,104. Okay, but 24,61,104 plus 3,15,720 plus 145,920. That is nothing but 29,22,744 minus 24,20,000. That's only you will give you 5,02,744. They also asked you to calculate profitability index. Okay, profitability index is nothing. Okay, discounted cash inflow divided by discount. So profitability index is discounted cash inflow divided by discounted cash outflow is equal to 29,22,744 divided by 24,20,000. So 29,22,744 divided by 24,20,000. Your profitability index is 1.21. Correct? 1.2077. This is a profitability index. Okay. Next one. Okay, next one. Discounted payback period. A discounted payback period is actually very easy. Okay, discounted payback period. So 24,20,000 is actually recovered in the between 5th and 6th year. Okay, it is recovering actually between 5th and 6th year. So 24,61,000. So 1 to 6 years cash flow is apdiye 6,33,000. Okay, 6,33,000 into 3.88. So 6.33 yes, 6,33,000 is the annual or discounted payback period. Ayyo. So actually you have to draw a table again, and that too for 1 to 6 years. Okay, discounted cash flow. Okay, discounted payback period. Actually, very good question. Okay, so discounted payback period. So what you have to do here is that this cash flows into discounted payback, and first year you have to write in first year. This 3,60,000 you have to write first, then 6,33,000, and like that you have to do. Okay, so 0, 1, 2, 3, 4, 5, 6, 0, 1, 1, 2, 3, 4, 5, 6, 6, and the money you have to do. Are you all understanding what I'm trying to do? I will just show it. Okay, very good question it is. So 0, 1, 1, that one I'm also receiving one more inflow. 2, 3, 4, 5, 6, 6. Okay, that is what. So 6, 6 I can actually total it. Okay, 6, 6 I can actually total it. And actually 6 varaikku varave varadu. Okay, 5th le mudinjirum. Then cash flows. Okay, then present value factor, then discounted cash flow. Okay, then cumulative discounted cash flows. Okay, so 0th year I should not write. I know my outflow. Now I just have to copy my cash flows here. So first cash flow 6,33,000, then second cash flow 3,60,000. Okay, so 6,33,000 and second cash flow is 3,60,000. 3,60,000. Actually, if I know that discounted cash flow is also asked, I would have done this table like an expanded form itself. Actually, naan the short form le panna. Okay, so now anyways, so 6,33,000, 6,33,000, 6,33,000, 6,33,000. Okay, and 6th year 6,33,000 plus 3,20,000. Correct? 6,33,000 plus 3,20,000. It is 9,53,000. It is 9,53,000. Now you put all the present value factors, and first year also you just you do in like in comparison itself. 633,000 plus 3,60,000. So you will get 9,93,000. Are you understanding? 9,93,000. Okay, 9,93,000. So all the 5-year cash flow you are having, correct? And this cash flow, if you do the present value and the discounted cash flow and the cumulative discounted cash flow, you can actually find out the discounted payback period. Okay, if the video will become long if I solve it. So adanala discounted payback period you solve and give me in the comment box. Okay, I will be seeing the comment box. Discounted payback period you solve it. Okay, you solve it. Pause the video, solve it, and then go to the next question. Okay, then go to the next question. Okay, next one, last question. Okay, this is theory. Last question. B. Dividend payback. Okay, so B is nothing but dividend growth model. So from dividend decision they have asked a question. Dividend decision, that too dividend growth model they have asked. Okay, that too dividend growth model they have asked. Sir, how to do this problem? Okay, let us read the problem first. Okay, let us read. Vista, okay, va? Vista Limited's retain. If you're not seeing the screen, na, just listen to me. Vista Limited's retained earnings per share. So they are not telling earnings per share, retained earnings per share. What is my retained amount? Is 3.6. So, and my retention ratio is 40%. So my retained amount is 3.6. So which means 40% is my retained amount, na 60% is my dividend amount. Are you all with me? So that is what is the trick here. So company is foreseeing a growth rate of 10% for the next 2 years. So next 2 years my growth rate will be 10%. After that I will be having 8%. Okay, va? So first for the next 2 years I will be finding the dividend. Okay, va? From there I am having a stabilized growth rate. So I can find the price at the second year, and then if I discount that today I will get the intrinsic value. So company will maintain its existing payout ratio. If the investor is required to earn a which is K is 15%, calculate the intrinsic value per share as of the date. Okay, as of the date today. Very good question. Okay, va? It is like a very good question. Now if you see, அவங்க என்ன சொல்லிருக்காங்க, 40% retained earnings. This 40% retained earnings per share is 3.60 அப்படினா, which means 60% is actually dividend. So if 40% is 3.6, what is 60%? 60 into 3.6 divided by 40, correct? Same cross multiplication if you do. Okay, va? So you will get this as 5.40. So 9 rupees is actually your EPS. So out of this 9 rupee, 40% 3.6 is retained, 60% is dividend. So actually your dividend today is 5.40. Now what they're asking, 2 years growth rate is how much? 2 years my growth rate is 10%. Then my growth rate is becoming 8%. So 2 years my growth rate is 10%. So D2. Okay, so what is my dividend second year? So it is 5.4 into 1 plus 10% to the power 2. So I'm writing, so first year right now my dividend is 5.4. Next year it will be plus 10%. Next year it will be plus 10%. Okay, so my D2 is equal to 6.534. Okay, so my D2 is equal to 6.534. After D2 my growth is becoming stabilized. So I can find out the price as of the second year, correct? Using the dividend growth model I can find out the price as on the second year. So P2 is nothing but D3 divided by K minus G. See, had you attended that workout batch, now you would be knowing that. Okay, a lot of problems like this we have solved. So D3 divided by K minus G. So what is D3? Okay, but D3 is nothing but 6.534 into that new growth rate. Okay, because now it is growing at 8%. So into 1.08 divided by what is your K? Your K is 15%. So 15% at what is now growth rate? The now growth rate is 8%. So if you do 6.534 into 1.08 divided by you will get 7%, you will get 100.81. But this is the price as on the second year. I want to find out the price today, because today's price is what is my value, correct? So second year value is 100.81. Now what is current value? So this is the future value. Now what is the current value? So P0 is nothing but, okay, but divided by 1 plus t to the power, okay, 1 plus I to the power n. So divided by 1 plus, okay, 1 plus I, which is nothing but K to the power 2, correct? So it is nothing but 100.81. If I'm discounting for 2 years, I will get the price today. So it is nothing but 1.15 square. Sir, why? Because it is actually K, correct? Discounting is done by K. So 100.81 divided by 1.15 square is equal to 76.23. So intrinsic value per share is nothing but P0. It is the intrinsic value. Okay, intrinsic value is equal to 76.23. Okay, 76.23. So now these are the theory question. Maximizing market price per share as per the financial objective. So as the financial objective which maximizes the wealth. Of wealth maximization is nothing but market price maximization. I always say this is true. Combination of lower risk and higher return is called as risk return trade-off. That is correct. And at this level, the risk return, at this level of risk return, profit is maximum. I don't think so profit will be maximum, benefit will be maximum, but profit is maximum wherever more risk, more profit, correct? So higher the risk, higher the return. So higher the return. So profit is maximum. So it is true, it can also be true, it can also be false. It is depending on the interpretation, but let me say true here, correct? Because risk return trade-off, I will be having more profit. Financial distress is a position when accounting profits of the firm are sufficient to meet its long-term so it is, if it is not sufficient, only then it is in financial distress. So this is false. Angel investor is the one who provides fund for the startup. It is true. Okay. So now, okay, what are the 4 forms of bank credit? What is payback reciprocal? All these are theory questions. Okay, all these are theory questions. See, all the problems we have solved. So we have actually solved the entire problem. You see, 1.5 hours, actually it is over, right? So 1.5 hours, within 1.5 hours we have solved. One more 1.5 hours you could have solved in SM, okay? Even though it is a lengthy paper, I have solved and I have explained this, okay? I have explained this, and one problem alone I have not solved, that I said, okay? Adu kuda na solve panna, it will take me only 10 minutes, okay, if I solve this problem also. But this is the same problem that is asked, okay? Same problem, okay? And arbitrage is the problem where no twist are possible. Two concepts, no twist are possible. One is approach, okay? That under this dividend you have that okay? Dividend, the model you are having. That same question, same format, template question will be there. Adhika I have a full video for 1.5 hours, and for 2.5 hours I have a video for arbitrage. I said my channel name Tawfiq Tufel. In that channel name, those two videos are there. In those two videos, the entire concept of model and arbitrage is covered. Any question is coming now, you will be able to handle, okay? So this is something that I've already covered, and lot of problems I will be solving, okay? So if at all you want to, so this is something like a workout that we are doing, correct? We are solving the question paper here, we are discussing the concepts here, we are discussing how to approach the problem here, so that the persons who will be writing afterwards will be more aware. So for them practice is made, and persons who have already wrote will be identifying their mistake and they will be putting in the comment box. So people who are coming afterwards will see what are all the mistakes that people have made, so that they will avoid that mistake. I always say the best way to learn is from the mistakes. So you are telling your mistakes, which means you are doing some punyam, and the persons who are learning from that mistake, don't do the mistake in the exam hall, okay? The person who already did that mistake, learn from them, okay? That is the best benefit that we are making, and for that, okay, this channel will be, or this video will be like an advantage for them, okay? This will be like a boom for them, okay? A lot of problems we will be solving, a lot of concepts we will be discussing, a lot of things will be coming on, okay? So now, okay, with this problem have been solved, okay? So be happy, okay? Even though if the answers are not matching, or if you've done some mistakes, now be happy. In fact, be ready, be prepared, okay? Be prepared, and write down what are the mistakes that you have done in the comment section. I always believe in interaction, okay? Face to face, I usually do a lot of interactions, okay? I become friends with my students, but now in this online mode, interaction is not possible. But at least, okay, put in the comment box, and okay, be with me, okay? Be with me, put in the comment box. I will be interacting, I will be replying to all of them, because I become very happy when my students interact with me. Are you all with me? Hello? Yes. Okay, so with this positive momentum, we are closing this today's session. I hope this session was completely helpful for you, okay? And put it in the comment box whatever you feel, okay? That is the bare minimum requirement that I'm asking, okay? That is liking the video and actually putting in the comment box what you actually want or what you actually need, okay? And if at all, okay, if at all you want to have the workout batch, okay, you can put it in the comment section. Our team will reach out to you. And moreover, okay, moreover, the only thing that I want to tell you is practice, and learn financial management subject, okay? For examination, I'm telling practice, okay? Regular class, I don't do practice. Regular class, I will teach a lot of concepts, a lot of things we'll be discussing in practical point of view, because I always believe conceptual understanding is must, and for practice, understanding the problem is one thing, approaching the problem is another thing, solving the problem is another thing. So you have to have an holistic approach to solve all this problem. Only then, you know, financial management, a subject like this, can be handled. It is like a very easy subject, very easy subject. The only thing is right approach, right mindset, okay? So with this positive momentum, we are ending this session, okay? Thank you very much. See you all again, okay? Thank you.